Hi, everybody. Thomas here. Looking forward to our session as always. I apologize for being just a couple minutes late. I just had a couple of technical issues on my end, just getting the live stream going. But as always, looking forward to being able to get things going. Let me share my screen really quick so you're not just staring at me. There we go. That's quite a bit better. And you can go ahead and you can use the chat area on the right hand side to interact with me and with the group. That's not quite going the way that I want, so give me just a moment. There we go. That's better. All right. Still getting a little bit used to the YouTube live format, but excited to be able to use this. And I think this is a change for all of us. Those of you been in the GoToWebinar sessions with me. We've been using that for quite some time. Making a change now to using YouTube Live, but I think this is going to give us a little bit more ability to interact with you and with the group, as well as for you to interact with each other. Excuse me. Again, you can go ahead and use the chat area here. And let me know if you can hear me and see my screen, and that would I would very much appreciate that. All right. A couple of notes. I do want to take just a minute before we start diving into talking about trades and talk about a little bit about some of the changes in the ITG group. Those of you that have been used to using that site to keep track of my trade alerts, as well as the different posts, and as well as these Friday events. We have made a change, and as of the end of this month, we will be sunsetting the ITG website. You can see the announcement that Jesse posted on the website earlier last week. That doesn't mean that we are going away, or that you're going to be getting access to less information. In fact, one of the main reasons we are doing this is to try to make sure that we can not just keep things going, but to be able to provide you with an even better experience than what we have been able to do. Discord is a pretty amazing community platform. It gives us an opportunity to maintain a community of like-minded people, like, for example, in an investing group, where we can share information, interact with each other, and do it in a way that is a lot more straightforward, streamlined, and efficient than what we were doing by running it all through our own website. You've all been added to my Discord server. So I just want to just go through a couple of different things that if you haven't already, make sure that you're paying attention to. First of all, the trade alerts that I publish each Tuesday will show up under the trade alerts channel. Now, if you have installed the Discord app on your phone or on your desktop, then you'll see you should get a notification anytime anytime I post any new information in any of these channels. But most specifically, the trade alerts is where you will find the trades that I place every week. The format has changed a little bit. You'll still be able to get to the same kind of information that I've always made available when I publish my trading alerts by clicking on the PDF, the link to the PDF here, and that will give you the ability to download a PDF version of that trading report. Give me just a second here. Here it is. This is this week's trade alert on Comcast Corporation. And so you have a lot of the same information that you're already used to seeing there, just in a PDF format rather than on the website. To try to simplify and make the information a little bit more efficient, on the post I give you all three of the different trades that I'm highlighting for the alert in the post. So you can see income trade number one was this week's put sale that I placed on Wednesday. Income trade number two, covered call. Income trade number three, bull put spread. So you can choose which of the three you want to work with, if you decide to work with them at all. And if you decide not to, that's okay too. As always, as you've seen me talk about in previous sessions, I don't expect you to trade everything exactly the way that I do, or necessarily place every trade that I do. This is just about trying to make sure that I'm able to provide you with some useful information that will help you decide what decisions you want to make with your investments from week to week. The recordings of this session, even though we're moving to YouTube Live, we'll have recordings of these sessions that will be available to you, and I will post them here. Now, you are going, if you've subscribed to my Rebel Income YouTube channel, you will see that I'll add these videos to that YouTube channel. But I typically will not do that until Monday or Tuesday of the week following this webinar. So as members of the ITG group, you'll see me post these here as soon as the rendering of the video is done. I'll post the link to these recordings in this channel. In the live webinar, this link is going to change every week. It's not just a one-time recurring event that I'm able to set the same way that we were doing with GoToWebinar. So each Wednesday or Thursday, I will post that week's link to the YouTube live event here. So you'll want to make sure that you're checking this each Friday morning before the webinar. The time is the same, so we'll do Friday, 12 p.m. Eastern time, as always. Just be doing it here in the YouTube live format rather than in GoToWebinar. If you have any questions about any of the information that I'm showing you here on Discord, please feel free to let me know. You feel free to drop a comment in the chat, and that'll be great. I'll respond to them as they come. So, all right. The open discussion channel is an area that I've set up that is pretty new. We have not done this in the past, not with the ITG site, and this is an area where you can send me questions, you can interact with each other as a group. You all have exactly the same access to this channel. And so I encourage you to try to make use of it. I will try to post some things like polls and whatnot here from time to time, just to try to encourage interaction in this channel. But this is another nice place, another nice way that we can communicate and interact with each other as a community. The reports channel is where this is again another feature that I'm adding to give you more information than what we were doing with ITG. And these are these are reports that I write 3 times a week and publish as part of what you've paid for, and that you will be able to get to anytime that you want. These are our analyses of stocks that I'm following based on my Rebel income analysis. And just as with the trade alerts, I post these as downloadable PDFs that you have access to and can view at your leisure. All right. Articles is where you will find my Thursday posts. These are just discussions about these are just articles that I've written that elaborate on more on individual elements of the Rebel income investing system. And that is something that I hope that it's just an additional value add that I've always included on the ITG website. And this is where those articles will be found now. Early access, this is just going straight back to my YouTube channel. And again, just as a bonus for being a member, and to show how much I appreciate appreciate being able to work with you, I'm giving everybody early access to these YouTube videos. I post them here and make them available to you, typically a day in advance of when I will actually post them on YouTube for public view. Again, sometimes these are going to be stocks that I'm going to analyze based on the Rebel income criteria that I like to follow, and sometimes they may be about other topics. But you get access to these videos before anybody else. Okay. That is pretty much my Discord server. The other part of this, and the other reason that we are moving everything to Discord, is to give you the ability to interact and be able to get information from myself and Jesse more easily than in the past. If you've accepted the invitation that is on the move to Discord announcement page here. If you've clicked this link to get access to the Traders Pro Discord channel, then you'll have the same access that I do to Jesse's information, including his Muscle Wheel portfolio. Here's where he posts trading updates every day based on his Muscle Wheel criteria, and here's a summary of what's happening with those trades each week. So Jesse's providing a lot of information there that you have access to, just as you do with Rebel income. So trying to make this as easy as possible for all of you, and to be honest, a little bit more efficient to manage from our side. All right. Again, if you have any questions about that, please don't hesitate to let me know. You can either drop it in the chat here. If you prefer to let me know after the fact, you can always send me an email at thomas@investive.co, and I'll respond to that as soon as I can as well. Okay, let's go ahead and talk about some of the positions that we're paying attention to right now. What's going on in the marketplace? Let me just switch my screen here a little bit, and we can see that what I have is the chart here for the S&P 500. Sorry, this is U.S. Bancorp, something different. Sorry, let me switch here. This is the S&P 500, and I just wanted to take a minute before we jump into talking about individual stocks, and just kind of talk about market conditions right now, because we are seeing the market start to really accelerate on the downside right now. Been seeing it sell off a little bit this week, after peaking a little bit above 5,600, right around the same peak that we saw at the beginning of July. It's doing the same thing here to start September, and we're seeing it fall a little bit. And so it's started. We see the market starting to pick up bearish momentum, and that may seem like a little bit of a concern and something to be a little bit afraid of. Um, what do you think? Are we looking at uh, are we looking at an early warning sign of a possible bearish reversal here? Um, the interesting thing here is that here's double top one. Here is a top number one of what could be a double top formation, and here is number two. Double tops can sometimes be indicators of longer term trend reversals. And we have seen the market following a very long term upward trend for most of the past 2 years, going all the way back to late 2022. Does that mean that we are bound for a new bear market? Not necessarily. This correction, even though, well, it's not even really a correction yet. I was doing the math, and this decline that we see so far from this peak at the end of last week is about a 4% decrease from that market's previous high. I think that's an important number to remember, and it's useful to keep in mind. You know, uh, what differentiates a simple temporary sell-off in the market compared to something that is a little bit more serious. Within long-term upward trends, retracements of up to 5% are very, very normal. And that's really all they are retracements, or what other people will call pullbacks. Those are healthy, and generally they make long-term trends easier to sustain. Now, that logic depends on the ability of the market to find support at some point that gives it a reasonable point to stabilize and begin to reverse again. And if I'm following my pivot analysis, we can see a pivot at around 5,300 here in May. That even though the market looks like it's accelerating, and today, just as we've been talking, it's even picked up a few more points on the downside. But it should see pretty solid support in that $5,300 point level. These aren't dollars. That would put this at about a 300-point drop from that previous peak. That's a little over 5%, but still within the realm of what I would still consider to be a retracement. At about 10% from a previous high, now you're talking about a correction. So between 5 and 10 is usually when people start talking about corrections in more serious terms. Well, in practical terms, from this peak that we saw last week, 10% is going to be about 560 points away from that top, which means it really is going to have to get down below 5,000 in order to mark an actual correction. And that's really bad handwriting, so I apologize. But that's about where we would need to get before I think that we would really be in a position to talk about a serious correction under current market conditions. Doesn't mean that we couldn't get there, but this is what we can use to kind of give ourselves a barometer to check and measure current volatility or current momentum in the market against broader against a broader picture, and try to put things into a practical context. All that means that for now, it's the market's activity for the last week, excuse me, hasn't been all that fun, but it's really not time yet to panic or to start to pull the or to start to pull everything out of the market. Now, market volatility, when it is increasing, that means uncertainty is increasing, and a lot of what we're seeing right now are people that seem to be really intent now on selling into fear. And there's we have the market idiom of sell the rumor, or excuse me, buy the rumor, sell the news. And I think they're kind of trying to reverse it right now because they seem to be anticipating more weakness than economic indicators are actually suggesting. And it's a little bit ironic to see this coming, see this kind of momentum coming before the Fed has even uh, indicated whether or not they're going to start lowering interest rates this month, as many expect. But we seem to be selling into the rumor as opposed to buying it right now, and we'll see if that continues to be the case. That creates a little bit more uncertainty and maybe makes trading a little bit more difficult. But it also can create some good opportunities. And if you're being selective about the trades that you're willing to take, it can still offer some really you can still find some really good value based opportunities to invest in the market right now. There's still some sectors that are more interesting than others, and that provide opportunities to find good values. And that's one of the things that I continually am trying to focus on. It's one of the reasons that I make so much of the analysis that I do available to you on the different channels on my Discord servers. I'm trying to show you the extent to which I'm combing the market for the stocks that offer the right kind of opportunities that we can work with under current market conditions. Certainly doesn't mean that there isn't some risk, or that the stocks can't go below the prices that we work with when we're placing the income trades we like to work with. But it does. I am looking for stocks that I think can be successful no matter whether the market is going up or down. That's the real big argument for value-based investing. So with that in mind, let's switch over and let's take a look at some of the open positions that we have. I don't have anything on deck that is set to expire today, and so that means that everything that we're looking at is at least a week or more from expiration. And that's actually kind of a good thing. It means that there's an opportunity to really try to consider what's happening with these right now in a very practical context. The first one, and the most I guess I should say the closest to an expiration date right now, is a put sale that I placed on August 21st on Bank of America, BAC, selling the $38 strike price, bringing in about 72 cents. So let's check in with that one really quick and see where things stand. It is following the market's lead over the last couple of days, dropping off of a peak at about 41, and it's currently a little bit below $39 per share. As I mentioned, here I sold the $38 strike price, so still about a week to expiration, and it's about 75 cents above that strike price right now. So for now, that looks like I'm in a pretty good spot, but with a week to expiration, it does beg the question of whether or not there's an opportunity to possibly manage this trade ahead of expiration. My personal preference, as always, is to hold the position and hold it to expiration and let happen what is going to happen. And so that's one of the reasons I always say that I never sell a put option against a stock that I'm not willing to own. I like Bank of America, and I think the $38 strike that I sold represents a really good value price. If you've placed the same trade However, maybe your perspective is a little bit different. Not that you may simply not prefer not to get possibly accept an assignment as I do. You may prefer to follow a little bit more active management approach with these trades. A lot of people in our group like to roll options as soon as they have a reasonable opportunity to. And with Bank of America above the strike price that I sold, we may have an opportunity to do that. Let's remember here, when I sold this option, I brought in 72 cents. I sold one contract. So I have a total obligation on this position of $3,800. Um, if I am assigned, if the stock is below 38 at expiration. So with that in mind, let's take a look here. And here are next week's options. Here's the $38 strike. Put option side is on the right side of my table. And we can see that the asking price for this right now is 35 cents. Last trade was at 33. So if you're in this trade, again, this is not a recommendation to buy or sell. I've got to keep my coward's door swinging, right? But if you're looking for a way to manage this trade more actively right now, this could be interesting because you do have an opportunity right now to to buy this option back from the market at a little over 50% of what I brought in. A lot of our really active rollers really like to try to take advantage of that. If there's an opportunity to hang on to 50% or more of the premium that they brought in a week before expiration, then they'll go ahead and buy that back because that eliminates the potential for assignment. It makes that the capital they use to reserve the trade, in my case, $3,800, that becomes available immediately and can be redeployed for another trade, depending on what your preference is. So that does beg the question, if you were to buy it back, what do you do next with the capital? Do you continue to work with Bank of America? Perhaps you decide to roll up and maybe take in a little bit more time. Well, here's the 38.50 strike price with a bid right now of 70 cents per share. That's not a terrible opportunity. Just a second here. Pull over a calculator. 70 cents divided by 38.50 means you can buy, if I buy my current option back that expires next week, I can hang on to about 37 cents of that money, and then turn around and redeploy my capital, roll up to 38.50 for 2 more weeks out, and bring in about another 1.81%. Now, just for comparison, then let's just excuse me, for larger context, let's say 37 is what I keep if I buy the current option back. Let's say that I sell for 70 cents. I don't even try to monkey with going in between the bid and ask or anything like that. I bring in $1.07 between both trades. And divide that by 38.25. This becomes, since I sold the $38 strike for my first trade, would be selling the 38.50 here, trying to come up with an average price to measure against for yield purposes. Becomes about 2.79, about 2.8% over the lifetime of these two trades. Now, for context here, of course, I placed this trade on August 21st, which was about a 3-week trade at the time. That means that This trade has been open for about 2 weeks. Going out another 2 weeks would make that a 1 month period of time. If I held that, if the stock stayed above 38.50 and expired again, that would mean that instead of the 1.89% that I'm in position, position to realize now, would be increasing that to about 2.8% for a 1 month period of time. Interesting. And that may be worth considering in very serious terms. As always, my normal method here is to hang on to the position as it stands and let it play out. And there's still a week to expiration. And for now, I'm in a pretty good position on this, and that's okay. I'm content with that. Has picked up some, come down even a little bit more here just in the few minutes since we started looking here, which is interesting. Okay, that's Bank of America. Coming up the week after that, there's a couple of different put sales that are set for expiry. The first one is FMC. Let's take a look at that one. And then we also have put sale on MGA. FMC is a stock, new one that I just recently added to the trading rotation. It's a company in the materials sector, which is an area that I like to pay attention to as kind of a broad barometer for economic activity, health, and it's because so many of the companies in the materials sector provide goods and services to every other sector of the economy. So when you see healthy activity in the materials sector, usually implies economic activity is healthy as well. And on a selective basis, this has not been true for stocks all over the materials sector, but on a selective basis, there's been I found some opportunities to work with some names that I haven't used in the past, and that's where FMC fell and set up an interesting trade. Now this one was a little bit different in nature because FMC doesn't offer the kind of weekly options we usually prefer to work with. So I placed this trade on the 14th of August, and it doesn't expire until the 20th. So I'm still 2 weeks from expiration, and I've been in it for about 3. I usually try to stay within a month or less on all of these trades because I want to try to take advantage of the opportunity to compound my returns through trading frequency. So placing more trades covering less period of time creates a net compounding effect that usually is going to give you larger returns than if you try to work with longer periods of time on your income trades. Selling less time, remember, also increases the probability that the stock should finish above the strike price that you've sold. So it puts the probability of the stock rallying more in your favor. It also leverages leverages time decay in more in your favor as the option seller, and that's true. That's true for any. I don't care whether you prefer to buy options, buy calls, buy puts, depending on what direction you think the stock is going. You should always remember that time decay works against option buyers, but it works for option sellers. It's one of the main reasons that I prefer to be the seller is to keep time decay on my side. FMC, I went out a little bit further than normal, but in part that was because of the fact that the stock doesn't offer weekly options, so that I can leverage that trading frequency as much as I like. Also, the yield on the trade was a little bit higher than normal, than average for the time period available, and that ended up being a really functional trade. I sold the $60 put. In this case, again, still a couple of weeks to expiration, and it's at 61.54. even though it is coming down a little bit today, down about $1.13. It's still about $1.50 above the strike price that I sold. Now, there's plenty of time left here, and so there's still a fair chance that I could be assigned at 60, but I like it at 60. There's a really strong support that I would expect to see here at around the 200-day moving average, which is my blue upward trending line here. And that's right around $60 right now. And so if it does bounce and go higher, then that should work in my favor. Let's say that I take an assignment at 60 on this. That bounce should give me an opportunity to realize a little bit of capital gain, and certainly to set up a new covered call trade on that stock, which is why I like to take assignments, is having the opportunity not only to leverage dividends like what FMC pays, but also the opportunity to pay myself a dividend with some covered call trades. FMC is also a nice. The other nice thing about this is the fact that they offer about a 3.7% dividend right now, which is above the S&P 500 average. So that's attractive. Let's go ahead and take a look at the option chain for FMC here. Now remember, on this one, I was able to bring in about, able to bring in $2.10 per share on this particular put sale, selling the $60 strike price. Now I have a higher capital reserve requirement that I'm having to meet here. Sold one contract, so I have $6,000 in reserve right now. But with it still $1.50 above that $60 strike price and a couple of weeks to expiration, let's see what kind of opportunities there may be to manage this trade early. Okay, so here we are. Here's the $60 strike price. The ask on this is $1.15 right now. Bid is $1.10. Which is interesting. Let's take a look, see what kind of activity there's been today. No volume on this one, which is a complication. Obviously, the last trade on this was around 75 cents, and that makes the you can see here. This was the last trade, and it has certainly increased in value since then. But at $1.15, if I wanted to buy this back with 2 weeks to expiration, that would mean hanging on to a little under 50% of the premium that I brought in. For now, I've got time on my side. I do have some other technical factors that I believe should work in my favor as well. So I'm going to continue to hold this and see what happens. Again, as I mentioned, I like this stock at $60. I think there's a really good opportunity with this stock to, if I am assigned, to leverage it with covered calls and possibly make some capital gains on the upside if it bounces and starts to go higher as well. If you're a little bit more concerned, considering current market conditions, about an increasing amount of bearish volatility, though, you can buy it back, and if you put in the ask price that's listed $115, even though there's not been any volume here on this contract today, excuse me, there's plenty of open interest at 290 contracts. So if you're not monkeying around with trying to wait for the market come to you, and you just take the current ask price at $1.15, you'll probably get it. Again, not a recommendation to buy or sell, just trying to show you what some of the different alternatives are. Now with this one, Again, talking about what you do next with the same capital, um, you could continue to work with FMC, and of course, the next contracts available are October expiration, which is out again a little more than 30 days. And there's about $2.40 to be had still at that $60 strike price, which is certainly very interesting. That's 4% for uh, 42 days of time. If you wanted to make the trade even more conservative, you could go here to the 57.50 and get $1.45. Again, this is without really even trying to monkey around with the market at all right now, and that's a little over 2%, which is still attractive in and of itself, and translates to probably about 1.5% if you consider the 30-day equivalency. Again, there's not a ton of open interest, but probably enough if you wanted to get into this. No activity on it as well today, so liquidity is a little bit limited. You might have to wait to get this trade if you were going to actually go and place it. All right, so that is FMC. And then we have the other trade that is set for expiry. That I placed this one last week on MGA, Magna International. Those of you who've been following my trades for a little while, you know that the auto parts sub-industry of the auto industry, auto components, I guess, is actually what the name of it, what its official name is, excuse me, is something that I find to be interesting. And MGA does a lot of OEM manufacturing. That means they produce components for the big three automotive companies, as well as some of the Japanese producers that sell here in the U.S. Stock is picking up again. All of these stocks are following the major market right now, right? So we're seeing a pickup in bearish momentum here. It had peaked at about $42 a couple of weeks ago, and it's now down approaching $39 per share. Now on this trade, I sold 42.50, so I sold very near at the peak on this one. Now I brought in 2.71% for about a 3-week trade, and so I've still got a couple of weeks to expiration here, but I am a little underwater on this one. Strike price that I sold is somewhere around this price area, and we see the stock clearly picking up a lot of momentum, especially today. Does that mean this was a bad trade? This is a really good example of one of the kinds of things we have to factor into our trading decisions. Put selling in and of itself, even if you're trading more actively, shouldn't be considered a method that you use to try to time the market, or that you're using to try to take advantage of momentum or swings in price. If you do that, you're effectively becoming a directional trader, just like somebody who is going to buy calls or buy puts. You're just working on the selling side of the market. Now, again, if you're managing your trades actively, that doesn't mean that you can't be successful, but you are going to have a higher incidence of needing to close those trades out very quickly to limit loss, and your results will be a little bit different than quite a bit different than what you'll see from me. Now, there is a possibility here. The stock is almost $2.50 away. Excuse me, correct my math, $3.50 away from the price that I sold. So the fact is, I could be assigned at any time between now and the next and the stocks, or excuse me, and and my options expiration date. And the stock is already quite a bit below that price. I'm not too afraid of that, though. Number one, this is a stock I like. I'm willing to own these guys. And there should be some pretty solid support here down at around the 52-week low, which is at around $38 per share. Again, this comes back to for me, this comes back to the question of why you place the trade in the first place. And again, I preach quite a lot and kind of beat the drum that if you're not willing to own a stock that you're considering for a put sale, you probably shouldn't do the put sale at all. These are stocks that I like. They pay useful dividends, and they offer. They've proven to offer good opportunities in a lot of different market conditions. I've been doing these trades now for a little over 10 years, and that means that there's been a lot of bull markets, to be sure, during that period. But I've also been applying these same kinds of trades during the correction of 2020, the early stages of the COVID pandemic, through the bear market of 2022, and I've generally survived. There are some stocks that are still very well below the prices that I sold them at and was therefore assigned. So I've been holding those for a while, but there are still companies, solid companies that I believe in, that have a good fundamental profile, and that I expect should be their stock prices should be higher than they are, based on the book of business that the businesses are running. So even with the possibility of being assigned with the stock about $3.50 away right now, this is a company I believe in. This is a company that I'm willing to own. I like it at $42.50. Now that not a recommendation to buy or sell. That if you're not in the same trade now, with it down here approaching $39. If you liked it at $42.50, it may be even more attractive at around $39. So let's see what's available on this. And again, this is just for informational purposes, etc. Got to use my disclaimers as much as I can. But it does beg the question of what you might be able to do to possibly leverage this right now. Let's suppose that it does have a very strong support at around 38 and starts to stabilize. Well, the bottom of downward trends, growth investors tend to really be afraid of these things. You don't know how long a downward trend is going to last, or exactly where the bottom is going to come. So when I say that I expect to see support here at 38, that's just based on the fact that it provided support in August, gave it a springboard to rally back up again here. Right now, everything looks kind of bearish, and it's kind of scary. But could just as easily the conversation could be very, very different as soon as Monday, depending on what happens and what other events take place as we see the market continue to parse economic data, news reports, etc. So if you like MGA at 42.50, maybe it looks even better at about 39. And that may set up some opportunities here to work with the stock. Let's see. Options here are a little bit tricky, kind of like FMC. MGA does not offer weekly options. They also, the price increments here go and in $2.50 increments. So I sold the 42.50 strike, which is here, and we can see that if I wanted to try to buy that back, limit the potential loss, I would have to I'd have to absorb a pretty healthy loss on this one right now. I brought in $1.15 on this put sale. So if I wanted to manage this, buying this option back at 370 would mean absorbing a loss of $2.55 per share. Now, if you are leveraging more active trade management with these put sales, that may be the smart thing to do, is to go ahead and close this out, absorb that loss, and move on to the next trade. Nothing wrong with that at all. $2.55 per share. Again, I sold one contract. That would mean absorbing a loss of $250 on the trade. And relative to the size of my account and the other positions that I have, that's a small loss, and that's not something that would be a really damaging or painful kind of thing to absorb. I'd be able to take that without any problem. Again, I'm going to let this play out. I'm not afraid of being assigned on this one, but if you're taking assignments is not part of the system the way that you're planning to do it, then this would be one option to try to manage that trade. If you don't have a current position open on this stock, with it approaching 39, if you wanted to be a little bit aggressive, here's the $40 strike offering $1.50, which is a little under 4% for 14 days. That's interesting. It's almost $1 in the money. So in effect, you're if you took an assignment on that, you would basically be a net positive of 50 cents, $1.50 minus $1, right? And so that may or may not be worthwhile. The 45 at 37.50 is more conservative, but is also a little bit less than the 1.5% target that I try to work with in each of the income trades I place. So this would be one that under current circumstances might be a little bit tough to try to worry about. There's probably, and certainly are, others out there that offer a little bit better opportunity right now. All right. The other put sale that I have open right now was this week's trade placed on Wednesday on Comcast, a stock that I've used in the past. Selling the $39 strike price brought in about 1.67%. And here's Comcast right now. It's had quite a bit of movement from one day to the next, but it's actually still right around the price was at when I sold the put option on this. This is 3 weeks out at 39. It's still a little bit above that price. We'll see where this one goes. I like the fact that in the case of Comcast here, broader market action aside, what we see is the 200-day moving average continuing to flatten a little bit, which is my blue line. The green line, which is my 20-day moving average, has turned positive. And so we see the distance between these two lines starting to narrow. Here it is. Just a few days ago. And it's about here now. So that's starting to narrow. The consolidation range is starting to tighten up a little bit. And the stock is, even with these couple of drops below the 20-day moving average, it has pretty much continued to hold at that 20-day moving average, as its shorter term trend has clearly still been going up. That I take still as a generally positive event. Doesn't mean that the stock can't reverse, of course, but it looks like for now, all things being equal, the opportunity looks still pretty good in this one. So I'll continue to hold it and see where we go. I've still got 3 weeks to expiration on this one, so we'll see where we land on the 20th. Or excuse me, this one was out to a little bit later, out to the 27th. So we'll see where this one lands. But again, these are all stocks that I like. Now, again, when this is one of the realities of current market conditions, when you see things starting to pick up bearish momentum, you are going to see an increase in if you're placing trades the way that I am, you'll take an increasing number of assignments, and that means that you may need to think about whether you need to manage these trades more actively to try to limit some of those assignments. The big thing then for me, the primary consideration, beyond the fact that I like these stocks, I think they're good values, and so I'm not afraid to own them at the prices that I'm working with. The other thing that I'm doing is I'm actively trying to be very, very careful about the position size that I'm working with. I sold one contract for Comcast, one contract for MGA, one contract for BAC, one contract for FMC. So in every single case here, I'm trying to make sure that I'm minimizing my overall exposure in any one of these positions. Even if I do get assigned at a significantly lower price, these are really just small portions of my overall portfolio and of my overall account. And so that helps to keep the risk profile in more objective terms, and helps me focus on the reasons that I like the company anyway, and the reasons that I would be willing to hold it even if it does continue to decline. All right, everybody, that we're just about at time, but I wanted to thank you for participating here and being part of the webinar. I didn't have any questions, but that's okay. If you do have any questions between now and next time, don't hesitate to let me know. You can certainly let me know on either the Discord channel or send me an email at thomas@investive.co. Thanks again. I look forward to our next session, and we'll see you on Discord. Thanks, everybody.